Hi, this is Solomon with the Mortgage Hub, and one of the common questions that I get from self-employed borrowers is that, do I need more down payments to qualify, if I'm self-employed? And the answer is it really depends on the program, right? So for conventional loans, it'd be the same as a W-2, 3 to 5%. That's the minimum down payment. 3% if you're a first-time home buyer, 5% if you are not a first-time home buyer. The catch always is going to be on the conventional side. If we still got to make sure you qualify, right? So it goes back to the whole, am I writing off too much to show? Am I showing enough income? Do I write off too much? So that's the main thing to consider on conventional loans. On FHA loans, it's 3.5% down, just the same as it would be for a W-2 borrower, and you have the same question that you would have on a conventional loan, whether or not do I qualify? So if I'm self-employed, what do my tax returns show, etc. For the alternative documentation programs like non-QM programs, bank statement programs, typically 10%. It varies a little bit by investors. Some of them are 10, some are 15. Some other considerations there depending on the credit score, right? It would be easier obviously to qualify since you're not using tax return, but using your bank statements, for example. And the other piece to note on alternative documentation loans is that you will need a higher reserves than you need on conventional or FHA loans. Reserves can be anywhere from 6 to 18 months, depending on the program, loan amount, credit score. On the credit score side, you can minimum required generally for non-QM loans or alternative documentation loans is going to be somewhere between 680 and 720. Okay, and if you can have a lower credit score, but that will require higher down payment. So 10% minimum would be somewhere between 680 and 720. On investment properties, whether it's conventional loans or alternative documentation loans, it's going to be 15% minimum. There are situations where that's also somewhat dependent on the credit score. So that's generally for better credit scores, so 680 to 720. If you're going to have lower than that, it's going to be additional down payment. So in closing, I think one of the things to keep in mind is that if you're self-employed, you can qualify on conventional loan using your tax returns. Down payment's going to be the same as for a W-2 program, or W-2 borrower, I should say, 3.5%, 3 to 5%. But if you need a bank statement or non-QM program, expect 10% minimum. Plus, you'll need cash reserves. The down payment requirement varies by program, not by whether you're self-employed. If you want to know what you need for down payment based on your specific scenario, please give me a call. I'll be happy to look at your scenario and tell you exactly what's required. I'm happy to help. Thanks.